So this is a special conversation for me. Um, Mark is, there's like you grow up in high school when you don't know anything about the world and you have a best friend in high school, and then you both graduate and go to like different cities, but every time you get back together, you're best friends. That's Mark Linao for me.
Thanks.
He was like when I was 22 and he was 23 or 24, whatever it was. We basically came up in VC together. He was an associate. I wasn't even an associate. And over the years, we somehow, got lucky enough to invest millions together. He ended up going and fundraising for his own venture fund, which he can talk about. And then I've done, all the things I've done. But really, Mark was like the person that I started with, and for days and days we talked. I just went through our old emails, and we met 8 years 9 months ago. So
Oh,
I've known
wow.
Mark for, yeah, pretty crazy.
Hello.
um so Mark, can you maybe just give like the audience here, who everyone here is a founder, they're all a part of our group, can you maybe
Cool.
give like a little context on how we met, and then I'll dive into some questions.
Yeah, I want to. This is a story, the how we met. I think it's super funny. So I was, and this will go in my background. I was an associate at a fund called Technicolor, and it was a corporate venture fund. So it was my first job out of business school. And it is the Technicolor that invented like color in film. And uh, you guys know Don. He's been in VR. Um, and the way we met is I was up at a Draper event, and I was hearing, and what was happening at the Draper event was they were pitching a bunch of different startups, and then Don comes up on stage, and one, he's like rapping, and then the second thing is like he's not pitching a startup, he started pitching a fund, which was like super crazy to me because I've never seen that done before. And it almost seemed like, was he like working on a startup and then decided to work on a fund? I don't know, totally sure. And then I think I was like with someone else at the time, and we were like, who is this guy? Like, what was that? But then that was pretty interesting. And then how he
To do
got,
what I've done, I had to cry, sweat, bleed. Please, 15 minutes is all I need. I still remember it. Yep.
yeah, and this is my reaction, like, still, like, I think that day I was like kind of laughing, but I was like, whoa, this guy's got, he's bold. He's super bold. And then we got reconnected again at one of the Unity conferences through this, David, I think was his name, but he connected us in person, again in person. And I was like, oh my God, you were the guy that was rapping and pitched the fund at Draper University. But I think that had to have been like the first of anyone doing that. And then yeah, we started scouting together and investing in a bunch of companies together. So that was how Dawn and I met. I thought it was a really funny story. I still laugh about it, thinking about it. And yeah, just a little bit for some context though. I After Technicolor, I went to go join a gaming company that went public and was the first mobile game developer and ran their corporate venture fund and investing in things like VR, interactive media, some gaming, and consumer commerce. And then fast forward to today, when the world shut down in 2020, I had a lot of time on my hands. I wasn't going to Japan as much as I was previously, from my other venture fund that I was working at, and they supported me to go do my own fund. And I got together with the guys that were at Musically, and they just exited the ByteDance, and that became TikTok. And then we started a fund, basically investing in a lot of things, of the overlap of media, gaming, uh, we say how consumers play, shop, and live. So a lot of gaming media, interactive media. We're looking at VR, AR, and some Web3 stuff. So a lot of the technical or the future technology facing stuff, but how that impacts consumers. And yeah, and that's what I'm doing now. And
How big's the fund, Mark, that you ended up closing? The
our
first one?
first fund was small. It was like 7.6, and our second one is 27 million. And yeah, I'm getting ready to go out to raise the third fund. And and that's something I'd always admired about you, Don. You were so good at um connecting with the most random people. Like I don't know if people know like your Warren Buffett story or whatnot, but uh, I think in this business, if even as an investor, you have to be not just a founder, you have to be really good at cold emailing people and getting in front of people and telling the story. And I definitely learned that from you. Like I still remember, I screenshotted it. I don't know where it is, but I remember you meeting someone. I think it was some billionaire, and you were able to meet him in person within like a week. It's so hard to get on people's calendars like that. And he's done, and for the audience, Don's done this multiple times. Um, and that's absolutely a skill set that not a lot of people have, but I think people should work on. It, Getting in front
We
of investors is just so hard, you know.
we
So,
talk about it a lot as a group. And there's some stuff I put into the group about how I do my cold messaging. So I mean, let's start there. We had an agenda, but let's throw it out the
oh
window.
yeah,
So
yeah,
forget that. I mean, you raised 8 million and then 27 million. Like that's awesome. You and I were struggling to raise 5 million for years, and
yep,
it took us a long time to get there. So the fact that you've been able to grow that much is amazing. Um, I know you're raising for a fund, but like what fundamentally, how are you getting all the investor leads? Because I think a lot of people here today are looking for how you grow a lead base of investors.
yeah. I think there's an art to it, and it's a it's a hard question to answer, but I'll answer as best as I can. Um, I think you have to, for me, at least my method. Some of it is cold, but a lot of it is also on relationships I've built. Um, I think for founders in general, maybe we're going to get to this later, but it's important to keep in communication um, with your investors, and that includes like your existing investors. I find that um, telling stories, keeping yourself top of mind to your existing investors really helps because that enables them not only to give them more data to like investors that they're talking to, because that's kind of the job of a VC is to almost be your outsourced corp dev capital introduction person on you're at the you're it's your responsibility as a founder to close the money at the end of the day, but help your investors help you. So I think when you pitch someone initially, it shouldn't always be. I'm not sure if it should be walking cold into a pitch. You should build a relationship first, because I think this is such a people business. We're investing in people. Yeah, all the business stuff has to align correctly and has to fit within a fund's thesis. So know those things going forward before you send a cold email. But make sure, at least that's my advice, to try to build a relationship first because you want to know getting who you're partnering up with because it is a long term relationship. Um, so that's what I've found. Technically speaking, I think going other things tactically speaking, I mean, building a network like this with other founders is super important because I think investors like investing in their portfolio's friends. That you ask an investor where their best source of deal flow is, um, besides other investors, and that's tricky because that's other investors are also co-opetition. Uh, Most investors will tell you like the best intros come from their founders. So if you can find an intro through a founder or through a co-investor network, I think that's super super useful.
Kind of like in real estate, there's off-market deals where the brokers know about it, but the market doesn't. Like once investors start passing around a deal, you're on market. And so if your trusted sources as a VC are actually your portfolio because they're the ones that get these deals before the investors start hearing about it. So it is a great point. How
Yeah.
many total investors do you have? How many LPs across those two funds?
I need to count. I think I want to say it's we have 40 in fund two, and I think around the same amount, 45 or 40, 45 to 50 in each fund. And I'll say that a lot of our investor base is some of it's a lot of corporate, and those are relationships I built by being in Japan. And when Don and I met, I have a corporate venture background, so I always had an idea of what those stakeholders had in mind in terms of what areas they wanted to be in. And then again, kind of going back to the other point, um, I think a lot of I know this is not like this is more of a founder entrepreneur, not a VC panel, but like a lot of the corporate LPs don't actually like investing in funds because they feel they don't get a lot of information or communication or FaceTime with that GP that they invested in. So that was a learning lesson um, for me, and I think that could be applied to actually a lot of you guys. I'll just say it's really hard for investors to be super excited if you're not sending updates. You don't have to talk to them, but you should try to have some kind of cadence or communication cadence with them. There's some in my past I've invested in companies where I haven't heard anything from them for like a few years, and then all of a sudden get an ask from them. You guys probably have that in your networks, and if someone doesn't hear from you for a really long time and you don't know so well, and they come with you to a favor, it's kind of off-putting. So don't get yourselves in those situations, especially with your investors and your partners.
We have JD in the audience from Playbook XR. And I think I've said this before, but he's the best founder I've ever met when it comes to updating people routinely. Like he just put me on a newsletter, and for years I would just hear like, once a month, a really good update. And so I think it's wise advice.
You
all right,
just
so you
reminded
have
me to
a,
write one.
huh?
You just reminded me to write another one for the
Yeah,
quarter.
yeah. By the way, I haven't got one of those in a few months. Um, Mark, so you funded a deal you were telling me about over text, which is started by Evan Spiegel's sister. And for everyone that doesn't know, Evan Spiegel is the founder of Snapchat. So can you talk about how you sourced that opportunity, how you met her, and then like what is some of the things you've seen from her as far as how she's been able to grow so quickly? And maybe you can also give some numbers around how fast and how successful her business currently is right now.
Yeah. So I met her through a co-investor that I've known for a while, and every now and then she'll send me something. She sent me this, and what her name is Caroline, and Caroline is Spiegel. She's a founder of a company called Quinn, and they are audio erotica. The reason why we invested in this company is because it hits on a few key trends that we look at. We notice that there's more people have AirPods, or just they're listening to audiobooks, podcasts more so now than they were previously. And what she's making is really the next what we think is the next generation of like romance novels. And the business model is there are UGC creators, a lot of them in Los Angeles that she's been able to identify that create content for her, and she's a platform kind of like Netflix to distribute it to a wider audience. And it's gotten so popular because apparently the female audience looks at I guess sexual arousal differently. They're more fantasy, imaginative. They like it's more about what they hear and what they imagine versus men were very visual. So it's almost like it's not audio porn, but let's just say it's like more smutty than like a romance novel for the younger generation. Um, and the reason why I think I wanted to bring this one up too is because it's really important that there's I think you guys have probably heard it, like founder market fit. She dropped out. She noticed this problem personally. She had problems with arousal. She solved it with this product. Um, and for her, this is what worked. Um, and then she made a business out of it. And she dropped out of Stanford for it. So like, it looks, yeah, she I don't think she's ever taken money from her brother or anything like that. But like, she the problem was very personal to her and to her journey. And what she's also good at, we've noticed, is that she's a good product person. Maybe it runs in the family or something. She was, for how young she was, she's kind of like you, Don. Like I was like so surprised that like when I first met Don, he was super young, and he like knew all these things about tech and product, and spoke at like it's like you were speaking to like a 35-year-old who's been in the business for a while. that's how I felt like with Caroline. Um, she knew how to build. She was speaking like a product manager who has had years of experience, but she was only, she's a college dropout. And the numbers reflected that she knew how to acquire users, all these things. So that's another reason why we really liked it. So I'll say that I'll kind of cap it here. Oh, you want to know about growth? Yeah, when we invested, I can't like share specific numbers, but let's just say she was doing like a few million in ARR. Now she's like double digits. She grew when we were in diligence, she grew like double, and I think since our investment, she's
He's
maybe
doing double digits of
million. Yeah,
millions
yeah, yeah. So
subscription revenue. Oh,
yeah,
wow.
and this was this is an investment that she was single digit, low single digit when we first invested. That like almost like tripled during our diligence, and then up to now, that's from the original. If you kind of back out the numbers, she's like a double digits now, like
All
probably
right,
hitting.
so quick question here. I want to butt in because this one I'm curious about. Also, everybody start to think of questions because we're going to open up the floor so Mark can help out some founders in the audience. Mark, why does she let you into that deal? She triples her revenue. She's got, Spiegel's name, like all the VCs I'm sure want to get in there. I know why she let you in because I know you well, but like why do founders and hot deals like that let you into these types of investments, do you think?
Uh, um, well, I'll say this: it wasn't like a super hot deal because of the category, but I think I was looking at it more from the numbers and the founder story, and that's why we did it. But I guess it got hot after, that's how it works. Like one investor says yes, and then all of a sudden many investors want to come in. Um, I think she let us in because one of the DNA of the fund were product focused. I think she's also, I just heard this yesterday from another founder that they've been diligencing us that we just got into I think is going to be a hot deal or is a hot deal. Um, we work with the founders on the product side, and we're pretty intentional about making introductions like that really help the business, whether that's like fundraising or customers. The other thing I would say is I think she just liked me as a person. I when she texts me, I text her back. She was able to hit me up on weekends. Um, uh, I I had my wife play with the product or try the product. I had friends try the product. I think she liked that the investor or I felt very like, oh, I'm building this like with her. I'm trying to think about the problems that she has that could come up and arise and try to surface that in front of her. And I felt like she maybe felt like it was on her team. And I think the other thing I'll say, I don't know, Don, what your answer is for me, but I think I'm pretty likable for some reason. I'm pretty like neutral. I'm even pretty even keeled, whether things go up or down. I'm pretty even. I think that probably comes across in my personality once you get to know me longer. So I think she likes that in the fund and in me, and she wanted to work with us.
Yeah, I think that the reason our partnership worked so well was that like I was like this and like the energy would come and flow and you were always very even keel. And I think, you talk about my skill being able to get a hold of people through cold messaging and stuff. I saw you put together so many rounds and like your real skill is I think connecting the dots of people, which I have a lot of that too, but you actually have that more than I do. Like I can think of Entry Point, Omnivert, Allison's company, Camera IQ. Like there were so many rounds that you basically were the person behind the curtain, pulling strings and making connections and putting together. So I assume that that's also something she saw as like you're very helpful when it comes to introductions. And
Yeah,
for all the yeah.
I was gonna say it's funny you mentioned that because I actually have done that so much, and I started doing that for like not charging. I didn't. I was doing that like for free because I just wanted to be in the game, and I noticed that I was good at that too. And funny enough, I actually found her lead investor.
Yeah, exactly. There you go. Yeah,
Yeah,
that's figured. Yeah. So, all right, for all the founders in the audience, Mark is the guy to go to with requests once he gets to know you for intros. He's
yeah. I
great.
want to mention like that dynamic too because I think in Silicon Valley it's a little bit different. Everyone's trying to lead and elbow each other out. We're the fund that you want to work with, um, we're structurally set up sometimes this way because a lot of funds are not going to share their best deals. I think, it's also it's a I guess it's a double-edged sword. Some funds can't write huge checks like mine because we are at the 27-28 million dollar mark. We're not a $100 million fund, right? And if you
Right.
look at how round sizes have grown, um, you know, seeds have gotten really big. Like we can't, if we're leading like a $5 million round, how does it look like if we're only putting in $1 million check versus like another fund that has to that could put a $3 million check into that $5 million round. Um, yeah, so that's something to think about. Like as you guys are out raising, like yeah, it's great to have that investor who can lead with a lot of capital, but try to find, make sure you keep room for people like us who invest 500 to 700K max, but can be really helpful with diversifying your cap tables is super important.
Awesome. All right, so let's open up the floor to Q&A. Sid, I'm going to call you up. Sid, if you can please make the question generalized, not about your specific business. So like fundraising advice, things like that.
Yep.
And that way we can try to make sure it's beneficial for everyone listening when Mark answers.
Sounds good. Mark, I just want to say, maybe it's your voice that's very, calming and soothing that makes other founders want to work with you. But I just thought it was very meditative. But
Oh, thanks.
yeah,
Maybe I should be on one of those apps.
Sid runs a VR meditation app. Maybe he could hire you for some stuff.
Oh,
yeah.
hey.
So as a background, Mark, I run a virtual reality wellbeing company. We sell immersive, clinically validated solutions into healthcare facilities where there's a lot of captive audience in the form of patients that are stuck in hospital settings for long periods of time and have nothing else to do. So
Very cool.
yeah, I've been doing this for 3.5 years now, have decent traction. But my question's more about the whole return the fund math. We've all heard that, right? And so do you guys really look at return the fund math right from the get-go when you're looking at a deal and figure out that, okay, this deal has the potential to, return the whole fund, and that's why this deal is going to get a higher priority in my list versus potentially other deals?
Let me just cut in real quick. First off, awesome question. Mark, can you just explain return the fund before you answer so everyone make sure we're aligned on what that is?
Yeah, definitely. So investors in VC, when they invest and underwrite a company, one of the criteria for a lot of venture investors is that that one company with your check and we have to get enough ownership, or this company in particular has to have a profile where we think that if this investment alone can pay for the entire fund. Meaning, like if I have a $30 million fund, this investment has to be able to make me like $30 million for it to make it worth it. And I'll say that the reason why we investors think that way is because we know it's hard. That VC is not like real estate or private equity. The risk tolerance is a lot. It's much more risky, and we're expecting like two-thirds of a company of our companies to return nothing, or maybe return a 1x or a 2 times our money. So yeah, so that's what return the fund means.
And how does it factor into your decision when you're doing
that? It's a good question because I think I'll say this, investor, like, yeah, I think we think about it that way, but here's what you should realize is that a lot of investors think about market sizing really differently. And um, it's funny. I wonder if investors go back and look at their old memos and if they see, because we think we can like predict the future, but I think it's really more about, at least at this stage, investing in the founders that we think can open up a market. And I'll just say this: maybe you guys have heard this story. You look at a company like Uber, right? I think a lot of people passed on that because of the market size. And if you, there's probably still something publicly available where some NYU professor put out like the valuation doesn't make any sense. And the MBA math sounds right, but sometimes, you know, they were saying that Uber was like a taxi business is a $5 billion market in the US. Let's look at like what Uber's market cap is today, right? It's
75. I think.
75 billion, right? Or something like that.
Think so.
So yes, investors think that way, but you have to find the investor that will think of your business as opening up a market or something radically is going to change in society where consumers will start using this differently. And that's the thing about, I would say, consumer in general. And I think market sizes are, it's kind of fluff. Like you don't know, like things change. Like, you know, at one point the market size for DVDs was really high. It's not anymore, right? I know that from Technicolor. So there's one point that like, you know, certain pieces of content were like, you know, like print was not as big as digital. So you got to think about it like that way. But yeah, I'd say, Sid, like to answer your question, VCs have to believe that your company can return a meaningful amount of your fund, and whether that's return the entire fund or half, uh, I don't think VCs publicly say what it is, but the VC has to believe that you could return the fund from my experience.
And so is that a good question for entrepreneurs to ask VCs that what's the fund size? And, you know, right off the bat, because, you know, because I think it's important to save time for everybody, right? In a lot of these conversations. And if the VC doesn't have conviction that this idea that you're, you know, topically presenting could have RTF math baked into it, then maybe there's no point in spending time cycles on it, right? So
Yeah, that's true. You know, I get asked a lot about what fund I'm in, how big the fund is, and maybe this is the reason why I've been getting that a lot lately. But I don't think it's unreasonable to ask that. And on the time cycle stuff, is, you know, my question to you is that do you think it's the return the fund math, or is it because they're just not sure about your business and they believe in something, but then they still have questions? I don't know, Don, maybe you can chime in here, but like I feel a lot of time, um, if you're in diligence for like too long and they're thinking too much about it, it's like either a yes or a no, or a hell yes. And Don, didn't you actually post that like on your LinkedIn recently? It's like,
It's not a hell yes, it's a hell no. I think it's a lot of VCs operate like that.
yeah, and that's why I think it's you know, I mentioned, yeah, it's good to know your VC and to get to know them, but once you're like enter that pitch mode and they're not armed with all the information, it's sometimes hard to get like a hell yes, right? So
Yeah.
so yeah, no, but that's a good question, and I would say operate as if like, yeah, you should return the fund for the VC, and you know, I think you have to make that judgment call whether or not it's worth your time.
yeah, awesome. Thank you, Mark.
Thank you, Sid. I got a question from Tom in the chat, but I just want to share this real quick, Mark. I found this last night. This is our pitch deck from 2018, our VR fund. And I was scrolling through it. And if you look at this slide right here, our portfolio highlights, I think this kind of like furthers the point you made. All four of these companies that we noted as our portfolio highlights didn't end up making us any money as a fund, really. And yet this was like our whole thing was like, look how sweet these companies are. And this one has Founders Fund and this one has General Catalyst. And, you know, so I think it furthers the point that like, no matter what you have, like even with all these co-investors, still 90% of these companies in your portfolio are likely to not return, you know, more than 1x. And so just like to further the point, one deal really actually does have to return your whole fund. Like fundamentally, that is what you have to have happen as a really good venture investor. So I do think it's cool to think about. All right. So just real quick before we hop to Stanley, Tom asked from the chat, what types of XR companies does Mark think could return his fund? And I'll reframe that as we did a lot of VR stuff for many years. Are you still looking at it actively? Are you, scared away from us losing money in it? Where do you stand on VR? And is there anything you're looking for that's interesting?
Yeah, I would say that we've still been looking at VR. Um, although Don, I mean, you're familiar with this company, Don. I don't know if you've had the founder of Rec Room on here, but
I,
um, there's been um, some companies that are like Rec Room. I think I'll mention a few, like Gorilla Tag, like that are social kind of a game. I understand what I hear is like Gorilla Tag's making a lot of money. Um, and there are some of these companies, and I don't know what the regulatory environment will be going forward, but oh, what's that other one? The Chris Milk company, Don, that they rebranded, but they got bought for I want to say yeah, Supernatural.
Yeah,
Yeah, so
400 million.
400 million. I mean, if you think about it, I think a lot of and I think Beat Saber also got bought for something similar, right? And
Yeah,
if you
Beat Saber,
250.
yeah.
if you were early enough and your fund size was like um sub 30 or 30 or below, you probably and you had some ownership, you probably returned your fund with that investment. I'll say with Rec Room and Gorilla Tag, there's no there was no liquidity or exit yet, but I think if they were marked at today's numbers and they were sold, investors would return their fund. Even the big investors would. The bigger investors would make a lot of money on those. So yeah, I think for that question, I still for me, and maybe I'm biased, but I'm still looking at entertainment, gaming, things like that, and that's what I think could return the fund, and things that are social in nature.
Okay. So for VR specifically, it's the looking at what's worked and that social, some sort of game element, and has some inherent virality to
Here's
it.
the rub to both of those, though. I don't think either one of those companies raised outside capital, and certainly not from VCs. Gorilla Tag didn't.
No,
And
Supernatural did.
No,
Supernatural raised from
Supernatural did?
Andreessen early, really
Supernatural
early.
was 40 million from Mark
Got
Andreessen.
it.
Yeah.
Yes, so did
That's
Gorilla
what I
Like
Tag.
during the first wave, like in 15 or 16, like very, very early. Beat Saber did not though. They had
Then
VR
this
Fund was an
round, like,
advisor, and I
stuff
think they
with-
got some shares. But they didn't take
Interesting.
nobody took any like official investment at Beat Saber.
Yeah. Oh, hi, Joanna.
'cause- Hi, Joanna. I was thinking of Verse. Sorry, Supernatural was their other company. They had Verse and then Within and then Supernatural. Sorry, I thought.
Yeah, but I think the investors came along. I don't think that was like a recap. I think
I understand.
I don't know. That's what my understanding.
That
I
would
could be wrong. Somebody else may know better. But that's what I think.
Yeah,
And
I know.
I think that brings up another point. Mark and I have gotten this advice from investors we respect. Like once you decide to bet on somebody once, keep betting on them, like keep doubling down. And I think Chris Milk's a good example. Within raised a bunch of money, didn't end up working out. Verse, whatever it was, similar, didn't end up working out. And like as long as you just kept giving him money, then his third one would have made you a lot of money, it would appear, from the $400 million exit with Supernatural.
I think they moved the company into the new company, didn't they?
They did, yeah. I thought they pivoted
Yeah.
into.
Yeah,
I think
Yeah,
they-
it was the same. It was the same
Yeah.
company. They just
I don't know the details, but point being is like, I think one thing that we've always heard is keep betting on the same person once you've decided, unless they do something to betray your trust.
Don,
Obviously.
I have to tell you guys, Chris Milk was the first person to put VR on my head. In
Really?
2014, yeah.
I mean, Within originally was making VR movies and messing around and
It was
stuff
a
like that.
360 video of back on stage. Yeah, exactly.
Yeah,
Oh, yeah.
and then they looked at Beat Saber and they said, "Hey, wait a minute, this thing is exercise." And everyone had been talking about how Beat Saber was giving you exercise, and Chris was like, "Well, what if we actually made a rhythm dance game that is exercise intentionally?" So that's just kind of Supernatural came about.
It comes with the experience of having built so many other things before that. I mean, they were
Correct.
printing
That's right.
rigs. they built that ear thing. Remember the head with the 4 ears on it? It was super weird and creepy.
But the irony is the two biggest money makers, Beat Saber and Gorilla Tag, were made by a handful of guys on a shoestring budget.
All right, let's
And,
keep it
Yeah.
going, and then we can do our
Yep.
chat afterwards, because this is
Okay.
all good for Postmark once he's hops
All right.
on here. I want to make sure we get through questions though, because he's extremely thoughtful. So if you have a question, please raise your hand, and then we'll
Yeah.
ask Mark while he's here.
I have
Stanley, thanks for your patience there, bud. Can you unmute yourself and ask your question?
Sorry, I thought, yeah, I'm unmuted now, right?
Yep.
First of all, Don, thank you for the invite. And all these questions and conversations that you've had over all these episodes that I've sat with you on are very informative, and I'll try to make this very short. I just spent 30 years with an entertainment company, global company, and the primary functionality of our platform is to bring together the convergence of local remote play and themed entertainment in a way that that brings additional revenue on several verticals, commercial verticals, to a theme park, for example, or to a location-based entertainment, but on a global platform. And so for the last 3 years, we have been working with a couple major players in the industry, and the ability to demonstrate the value of that has been, very obvious to all of us. My question to you is that, we've been leveraging the corporate relationships, and we're doing really, really good with that. But the idea of some of the getting additional funding and for development for the company is something that we've been talking about, internally quite a bit. We have obviously the relationships that we're doing on the corporate side are generating revenue that is focused on that particular IP. But there are much bigger plays that are falling into some of the NASDAQ companies that are just recently come to be. For example, I don't know if you're familiar with Falcons Beyond. It just came out on the NASDAQ, and they have a lot of our peers that are involved. It's the first time I've ever seen a production company like that.
Stanley, I need you to get to the question just so we can make sure we get through everything.
I appreciate that, Don.
All right.
So at what point do you evaluate what VC relationships really bring value to the development process when you have other corporate partners? How do you sift through all the VCs to find that right relationship that you had mentioned earlier when we started this session?
How to sift through how to find the VC that has value, given that you already have like the corporate value add on your side.
That's it. Thank you for making that simple.
Yeah. Well, I'll say this: like, not a lot of VCs are backed by corporate, so yeah, like a VC targeting. I think that's it's kind of a difficult question, because I think if you actually talk to most VCs, they're not backed by corporate. They're backed a lot by retirement institutional kind of money. So really, it's on that VC to market, and they do a lot of things by going on podcasts. They write a lot. They're on X. You're probably, if you know the other entrepreneurs, that's the best way to get an idea of how they help. But I'm just trying to understand, in your particular situation,
Mark, can I
what kind of help are you
reframe the
looking
question
for?
real quick? I think
Yeah.
it'll be helpful for everyone. So how do you target investors? Are you building a list of 100 investors on a target list before you reach out to them? Like, how did you target your LPs? And I'm sure that's applicable to what founders can do with VCs as well. How do you go through that process?
Oh, okay. Okay, so that's helpful. So the way I'll just say how I did it, or how I help other founders do it. One of our value adds, right, is that we have a list of VCs that we work with pretty closely. And I'd be surprised if other VCs don't do this, but we tag those VCs by what things they like. And I think why it's hard to do this from your point of view, Stanley, is because that information is not out there on some public database. That information sitting on my Airtable. I have a list of 150 VCs, and I tag them on the things that I think that they like, they want to invest in, and what the value add that they bring, whether that's product, corporate relationships, etc. So for you to find those investor relationships, you would have to. I don't know if you already have you said you already have investors. I'd imagine they have a network of investors, but targeting is pretty hard. You'd have to spend a lot of time on LinkedIn, just doing this from scratch, I imagine, and going on their website and reading a ton of stuff. That's a huge lift. And I don't know if you can get an intern or someone on the BD side to do that for you. But that's how we organize a fundraise when we're going to go help a founder out. We're like, who in our network do you know that would do this? What can they do for the founder? And would they like to talk to this person? So all those things have to line up. And it's, to me, this is also another hard question to ask, because I think it's hard to just do. I can't just give you this answer, because I don't think anyone can just go ahead and go do this. You have to have some connectivity already, or you got to be willing to put in that kind of research in, which is very time consuming. And that's like another job on its own.
Well, Mark,
But also, we both did that, Mark. Like, we spent hundreds of hours researching, networking, and building out those lists. So I do think it's fundamental to, as a founder.
I appreciate you, kind of focusing that question. But, Mark, you mentioned early on about the relationships with the investors and how they are, a lot of investors want to be engaged with the company because they, you want to find the right investor that's not just about money. It's also they bring value with what they do and their knowledge of the industry that you play in. And so that was really the fundamental circle here that I was trying to get to. And I think you did a great job. We all do the LinkedIn thing. We do a lot of that type of research, but finding that right investor, because there are a lot of people who, I think in the last call I was on with you, Don, you had a whole bunch of VCs that were in there that were asking really good questions about what people needed the money for, how are they funding, through what phase, and that sort of thing. But getting the right partner as an investor is something that we do look outside of the Universals and the Disney and so on. And I was with Universal, just to be really frank. So,
okay.
So, and so what we were looking for was somebody, a VC, who understands that play, because you just mentioned something, Mark, which is exactly what this is all about, right? It's about bringing remote play into a local location. That's the big cat's meow right now that everybody's chasing. So finding the right VC that can play in that space and bring added value, not just money, is really critical. And I think you answered the question by basically doing your research, utilizing LinkedIn for the VC research to see where they're playing, what they're doing, and I guess
One more point, Stanley, is I talk about find comps of startups that are similar to yours, and then go to ChatGPT and say, who are the investors of, comp startup, and you'll get a list, and then work backwards from there. You can pretty quickly build out like a list of, 50 names that have funded VR entertainment and things like that.
We use ChatGPT a lot. That's the first time anybody said that. I'll do that. I'm already becoming we use it quite a bit in our development, but
becoming
anyway.
popular. All right. Thank you very much, Stanley.
Thank you, Mark. Thank you, Don.
I've actually used that method, Don, for sourcing potential LPs in the fund too. That's interesting. One thing I wanted to mention though on that, Stanley, I think a good investor update, if you are sending out investor updates, and I get a lot actually that aren't even in my portfolio, but they always have an ask or something in that update. And a lot of time I'll be like, oh yeah, I know someone who could probably fill this role, who could probably make that connection for them. Why don't I just forward this over? It's nothing on me. I'm helping someone out. So make it, like I said, make it easy for them to help you if you have them on a list already.
Understood. I appreciate that.
Great point, Mark. Yep. At the very last line of the email, it usually said, ways to help, and then a little sentence of an ask. So that's awesome.
Great. Thank you.
All right, Alan, what's up?
Hey, what's up, Don? Good to see you, buddy.
Good to see you.
So great to see all of these people on this call. It's so cool. I love it. Anyway, thank you, Mark, for sharing your knowledge. I have a quick question for you. You know, you mentioned investing in the founders, and my question is, if a founder is going to be building a category changing or a a world changing technology, which you're betting on, how do you feel about control mechanisms? For example, installing like Mark Zuckerberg, for example, only owns 12% of Facebook, but has controlling interest in it or controlling decision making. Same with Epic Games. Same with a number of other, Canva, the founders of these Roblox. Um, how do you feel about that? Because if a founder is really dedicated to building, an entirely game-changing thing, they're going to want to maintain control. And I've seen other companies get pushed around by their investors, and that is incongruent with the kind of betting on the founder.
That's true. I'd say I'd seen both sides of it where a founder had a super majority, like vote on the board, and that ended up not being a good thing. I've seen deals fall apart where, the companies are already at some kind of scale but don't have a board yet. I'll say this, I think for early stage, if you're raising a seed and um not doesn't always make sense to have a board and to have the founder actually be in control. When it gets bigger, um that's just like a dance that the founder will have to do with the investors. I think typically investors would want to see some kind of governance and some kind of checks and balances. And I'm of the opinion, like, once you're at B or Series B and beyond, you probably need that. Um, and not unrelated, but sometimes the founder. You mentioned these companies that are founder led still at this point. There's so many situations. I think there are more situations that I've seen where once a company goes public or is at that stage, maybe the founder was really great at product, got a Series B or D, couldn't build it after that. Um, there's some good examples, and you guys, and I can name some, but like Audit Board, for example, which just it's not related to this, but it's an LA company, enterprise. I think the biggest LA enterprise SaaS company that ever got acquired in the last decade, got acquired for 3.5 billion. Met the founders a few times. They are making accounting software, accounting compliance software. The founders stepped off. They were product people. They stepped off at Series B.
But they knew to do that, or the VCs forced them to do it.
They knew to do that
So,
because they
so
knew
then
that.
what difference does it make if the founders have super majority, if they know to make the right decision? Kind of like Google founders. They're like, we're great at product. We know what to do here, but we're going to bring in, the big guns to run the company. So if you believe in the founders will step out of their own way and make the right decisions. And again, it's incongruent with, not supporting a founder who wants to have super majority.
Yeah, but I actually don't know how that situation went down. If they made the decision, or if the investors did that. But I think we talk a lot about these certain founder-led companies, and I'd be curious to see what the math is. Like, how many of those founders actually exist?
I think a lot of founders don't realize they can do it. It's not a common thing to say, hey, you know what? And it's probably more of a mature founder thing. If you go into this your first time and you're like, hey, we're just at a university, we made a cool technology and we're bringing it to the market, you wouldn't know that there's a possibility of adding more shares or changing the preference share rights or these types of things. Because VCs do, countless deals. A founder, maybe if in their life, maybe does 10 deals like that in their entire life, if they're really good at it. Um, and not everybody's read Secrets of Sand Hill Road to understand the nuances of it. So VC comes at any negotiation from an area of strength over the venture itself, the business. And so if a business knows that they can say, hey, no, I want to be in control of this company, because I would venture to say that, Eric, or the last gentleman, was speaking about, bringing on VCs who are going to create value. My counter to that would be most VCs detract value from a startup. And there are very few like you, Mark, and I, it's sad that they're not celebrated more, the ones who actually bring a lot of value. but there's so many that destroy value. And, maybe there's an exit that's good for almost every shareholder, but the VC's like, no, I didn't get my 10 bag or my, 30 bag, and they block the deal. And this happens all the time, and nobody writes about it. Nobody talks about it. There should be a glass door for venture capital.
I think there is. I think, funny, you told me, I think Know Your
Neo
VC.
just launched a
What's it called?
investor review. Yeah, it's like a platform where you can do Yelping for VCs, I believe it.
I love it. Can you send
Yeah.
that and put that in the link? Put that in chat. That's
Yeah,
actually
I
good.
will. I'll
I
put it in
thought
the chat.
know your VC was that, but no, but I agree. A lot of founders getting, a lot of VCs get in the way, and that's why when I work with founders, I tell them I'm pretty much like hands if. Um, the whole point of you being a startup and not being in corporate walls is that you're nimble and you can move. You don't have the stupid recurring meetings and you know the bureaucratic stuff. Like we should get out of your way as a VC.
All
And
right, so
also need us. Yeah.
Mark, I want 500 grand from you. Okay. What do I have to do as a founder? Like what are you looking for from a numbers perspective? What do you look for in general to make
Good
that
question.
investment decision?
That's a good question. Okay, well, here's what I would say. I'd like to see some product market evidence that you can get to product market fit, and there has to be founder market fit. Like that's probably table stakes for me. I have to be.
That mean?
I mentioned it earlier. Like a founder have to be convincing where their story and what they're building is a product that they know intensely, or a problem they know intensely, and that they have that desire to solve, and it has to be an irrational desire to solve. That's like something that I've noticed. It has to be. I don't want to use like a negative words, but have you kind of obsessed with the problem, right? Because it's personal for them. They have something to prove. They have a chip on their shoulder. They've experienced firsthand, so they have a unique point of view. So there has to be some kind of founder market fit in that sense. So I think you guys have probably covered this topic before, but a lot of fundraising is like storytelling. So I need that. I need you, Don, to tell me the story that makes me compelled to take a second and take a look under the hood. Then all these other business things have to align. There has to be a little bit of traction and like no numbers, but I can say generally anywhere between that you can prove some revenue or at least inklings or like proven that's there. And I can get more technical on it because we're consumer founders. We look at retention numbers. We look at how your beta test is going. We look at are these people coming back to use your product or not. Don, you've been through that. You've seen how hard or how easy it could be to show retention. But we want to see those positive signs. And I say personally, I'm a little bit more of a, in a way, I like some momentum in the business. So I'd like to see some of that. Whether I just want to see that you're growing and you're not stagnant. And
So
then on the deal side,
what retention numbers are impressive to you? Like what's the benchmark you look for a consumer app?
well, let's talk about engagement. I'd like to see more than 20% daily active to monthly active users. So let's say you have like 1 million users. 20% of those have to be daily. I'd want to see more than 30% of those people come back by week 4 also. So you're not in that whole thing of like having to acquire new users all the time. What we've seen is like 60, 70%. Like actually we have one company. I've never seen something like this before, but it's in our Fund 1 portfolio. Literally 99% DAU and 1% churn a month. So that means like out of 1 million users, like 999,000 of them come use it every day. Like that's an anomaly, but we like to see, that. And I think, Don, you probably had Nico on here from GC, but Snapchat was showing signs like this, right? Like 50% daily active user to monthly active users. For every user that had Snapchat, 17 of their friends would join. like if you look at, we can go on and on about those metrics, but I think we want to see that people are using it and you're not like engineering some kind of use for them, that they truly inherently love the product. Yeah, and like what Alan posted here, product market fit, founder market fit. And then on the last point for the return to fund math, we have to be able to get to conviction on the market size and can we own enough of the company? Will this 500K, like you say, can I backwards calculate that 500K does the return the fund math? And that is based on your valuation as a founder that you're offering to the investor.
I think Nico told us that the early Snapchat users were opening the product 50 times a day when he came and spoke with us. And he said, I'd never seen that level of engagement, even though it was only like 10,000 monthly actives. It was clear that there was something there that was interesting.
Yeah.
So for the example, that company you're talking about with 99% retention, low churn, which by the way, my last company was the exact inverse of that. We lost everybody. But do you get greedy when you see that and you're like, hey, I want to put in more money because clearly you have something here? Is that already too hot of a deal to do that? Or is that something where there's still other risks that, you're just happy you did the deal, but you're not looking to put more money in right now?
No, we're greedy for sure. Like this
Yeah, okay.
company's already had acquisition offers and all the stuff that, but they're not going to sell. But yeah, definitely. And I would say the business model, they're making money, but it's, yeah, I kind of hesitate to talk about which company it is because the founder has gone through a lot of issues, but is there now. But the company is gone, is he's a maybe he's a little, not I won't say a little too much, but he's really founder market fit. Like he found a problem with parents, is solving it, and then found another problem with parents, and now he has this great business model. But he's like, I actually want to work on this instead and tie this to the business because this is the real problem I'm seeing on that 1% who's churning, who happen to be like the lower poorer of the poor users on his platform. But he's trying to solve a problem. I mean, the guy's gone through 2 or 3 near death experiences, so he's building this to build something that is benefiting society. So
I don't recommend the near death experiences, but the person we had on last week also went through one and then sold his company for 500 million based on that.
yeah, don't go
if you
engineer
do
that.
happen to have one, call me for investment, but I hope nobody has one. Yes.
Yeah, no, but that story, right? Like,
Yeah.
not even near death experience, but that it's a real. It's important when it's no longer. It's interesting when it's not about the numbers and not about, oh, I just want to be rich and fly private jets all day. I mean, yeah, we want you to become rich because we become rich, but I think investors gravitate towards those stories.
Yeah, I can't emphasize enough how important the emotional side of a pitch is. All right, I want to make sure we get you out of here on time, so I just want to show you this. Here you are in the Candela founding team. This is the first fund from 2017. And then if you look at this milestone chart, we opened this angel fund as our first thing. We built a leading syndicate on AngelList.
Yeah.
We, ended up running the Scout Fund for General Catalyst. We had 30 ARVR investments by 2018 together. It's like pretty cool to look back. And at this point, it's listed here, you were a principal. And I always thought of you as like a legendary VC partner. And so the fact that
Thanks.
over 5 years, you've then raised more than 30 million and, are doing these level of deals. It makes me really proud and I'm very happy to hear it.
Oh, awesome. I appreciate it. Well, thank you for having me on this. It's really great to go down to think about the past and see how far we both come. And yeah, amazing that you've been able to put this group together. Yeah, Don's the best. So
can I ask one last question before you hop? I know we're at time here.
Yeah.
Tom just asked on the retention engagement side, how is that different for VR AR stuff? How much of a handicap will you give founders when they're doing something like that?
I would give them, because I know I understand that you're in a different, I guess, medium. But I'll say this: I've actually seen some VR stuff with really, really engaged user base that surpasses mobile, you know. So I'm not sure how much of a discount I would give it. Once we see that, it's once I saw that and I was like, that's really interesting. Um, but yeah, I think we would give some sort of what I learned from someone at who worked at Meta was that I think the retention's still kind of tough on just anything on the Meta platform. So it is an anomaly to see probably the few companies I saw that had good retention. But yeah, I can understand that piece. It's like saying like, you get more there's notification mechanisms in mobile versus desktop. And we totally understand that point of view.
We asked Adam Draper the same question, and he said I expect more engagement and more retention from a VR company. So it's actually a higher bar because there's less of a addressable market than like an iPhone. There's less headsets out there. You fundamentally need to have a more engaged product base. And so I thought that was kind of counterintuitive, but very interesting
That's a good answer. Yeah.
Yeah, that was cool. All right, I'll hit you up on text. Thank you for joining us. Everyone,
All right.
stay around. We'll
Thanks,
chat about
everyone.
all this. Congrats on the fun, dude. We're proud of you. Thanks for coming.
Thanks,
Yep.
Don. Thanks, everyone. Bye.
Yep. Bye. Have a good one.
You too.
All right, cool. All right, so let me unspotlight myself. We'll go group combo. So funny. Looking at this deck, look how silly this slide is here. PC, mobile, mixed reality.
Yeah,
Still
that's
waiting
pretty
for it.
Good.
I remember vividly making this slide and thinking like, oh, this is the most clever visual ever. So I think
It
I got
is.
it. I
By the
think
way,
I
Don,
stole it from VRLA Cosmo, I'm pretty sure.
Meta does provide benchmark data for your apps. So we, for example, are on the 80th percentile with a 12% 7-day retention. So that's considered to be very good on the platform. Doesn't sound like much, but apparently that's really good.
Hey, it's good to be the biggest fish in a small pond. That's okay. Yeah. So
it's all relative.
Yeah, exactly.
Hey, Don, that slide you showed, that could be Meta's slide when they were trying to pivot to, VR and stuff.
Yeah, I'll email Zuckerberg. Maybe he'll. Yeah. Well, so what did everyone think of the conversation, and any thoughts or questions that you might?
Mark seems like a pretty thoughtful guy, I have to say.
Super.
Great conversation. Yeah, very smart and there's no ego. He doesn't feel like he feels like he's coming from a good place with this. I think that's important.
He was one of the most genuine people I've ever met. Like the amount of people I've seen him help, and you're right, it all comes from just this like very soft-spoken demeanor. It was why I fell in love with the guy, like when I first met him.
Us great people have to stick together, Don.
Yeah, it's I hope I can be that. Yes. No, I mean nobody was like Mark. Like I just thought he really is like the definition of founder friendly. And he doesn't do anything without thinking about it. And to me, that was so valuable to have as a partner back in the day. He would say like, give me, 48 hours to think about it. And then he would actually do that and come back with a solution. As opposed to, I think a lot of people just kind of jump at the gun, myself included. And so he's a unique person. Any thoughts around lessons that you felt like you didn't think of before he said something today?
One of the questions, I guess, I don't know if somebody asked, but what stage of startups does he invest in?
So he'll do his checks are 500 to 700K. So
seed stage, maybe?
Yeah, it's usually he's either going to be in a early A round where it's a hot deal. So like the one he talked about where she was doing 1 million plus ARR, and then it's grown to 10 million plus ARR. He did that at the late seed, I know. And then they went, and I think they've recently raised like 15 million for an A or something like that. So he's like kind of right in that sweet spot. I think probably more important is just he's someone that really needs to get to know founders for a while before he invests. And so
Yeah.
he's a good example of like why you should always be networking and not pitching. The more you can network and build a wide base, the better your pitching is going to go when you eventually get to that stage.
Yeah, but it seems like most investors or VCs are just like you get an initial convo and then it's like send me your pitch deck. And they don't try to really get to know you.
No, it's
Well,
not their
depends.
job.
I mean,
Their job is to say no as
Actually-
fast as possible. Your job is to keep them on the line as long as possible. And so
I always ask, is it okay if I send you updates from time to time? And they almost always say yes.
That's better advice than sending a deck, because we use DocSend to track it. And the
Yeah.
average time VCs spend on looking at a deck is something like 7 or 8 seconds. It's
Oh
shocking.
no, DocSend is great. VCs used to really hate DocSend because you could tell they'd say, "Oh yeah, I read your deck." I said, "No,
Like
actually."
7 seconds, you read it, eh? Okay,
yeah, Al,
cool. What did we
Alan,
get out of that?
I have the data to back that up. Like hundreds of investors looking at my decks. I think the average was it was below 40 seconds. Like, so you really, and there's a book I've recommended everyone to read called The 6 Secrets of Raising Capital. I know like Steven's just finished it. A few people have finished it. That's the first thing he says in there. No investor's going to read your business plan. You spend hours and hours putting all the stuff together, and like they basically just click through it in a matter of seconds. But to address Christine's point, Christine, I cannot emphasize enough how important it is. Like you need to not give a VC any reason to say no to you or to reject you. Like there should be no opportunity to reject you until you have 30 or 40 warm conversations that are still up in the air. And so my strategy is always have as many initial conversations as possible. And when they ask you for your deck, you say no. When they ask you, are you fundraising? You say no. When they ask you, how much do you want to raise? You say, that's why I'm having these conversations to figure out if it's even worth it. And like, you just push back everything. And the other thing you said was, sometimes the VCs don't get a chance to get to know you. For me, like, if you were to look at the analytics of my initial investor calls, it's out of 30 minutes, 25 minutes is the VC telling me about themselves, and 5 minutes is me, maybe 5 minutes is me talking about what I'm doing in my history. Like if they ask me a question on the call, like, so what are you building? I'll literally go, oh, it's an avatar app. But like, I saw you funded an avatar app a few years ago. Like, how'd you meet that founder? Like I deflect everything back to get them to just talk for 25 minutes. And the reason why that strategically is the right way to go about it is because I'm qualifying that person if I want to follow up with them later, right? Like you have to have that mindset that you are the value here. And so the question that you talked about is like, how do you get them to not reject you early on or whatever? Like it's the wrong question. The right question is like, do you want to follow up with that person? And if so, then you'll follow up when you're ready to do that. And that mindset is imperative to
it's like you're playing hard to get, but you're not being a jerk about it. And so a couple things. Hi, Craig and Austin here. I actually co-authored the first 3D multiplayer online video game back in 1991 called Spectre, and that's my claim to fame. Over 50 video games. I was an angel venture partner. I'm serving as CEO at a VR simulation training company. We train heroes. It's really fun. But I have an answer in part that might be useful to an earlier question. I think Stanley may have asked this. I've hired the last 2 companies, a C-suite door kicker, somebody in the industry that's got reputation that people will pick up the phone and talk to, both customers and investors. And as a very fresh example, I've hired a guy who's like well known in the industry. He's on vacay in Tahoe. He met with a venture guy today, a friend of his there, and he just texted me during this call and said, hey, made the connect. He wants to meet with you next week. So that's the kind of relational dynamic that, I've told my kids often, it's often not what you do, it's who you know. And so opening those doors for us, and he's extending his credibility on our behalf. It's really powerful. So anyway,
Greg,
thanks.
how do founders find someone that can lend their credibility to the
60-second
founder?
backstory is I've been an angel. I've looked at over 3,000 startups in my career. I've gotten really good at telling founders that their babies are ugly and stupid in a way they feel respected. So that's kind of a gift. But I reached out to a guy that I invested in here locally. I went to his launch. His name is Renji Bajoy, the guy at Visor, Immerse VR.
He's
and had
coming
lunch.
to talk in January, I believe.
Great,
That's
great. Well, I'll
awesome.
be here cheering for him. Please invite me.
Nice.
And so I just saw his launch here live, and I said, Renji, here's what we're doing. What do you think? And he goes, dude, you need to talk to this guy. So that's the network effect. I didn't ask him anything about how did you raise, how did you do. To your point, whenever I meet with a fund or PE firm or others, I do my diligence. I find out what they're like, and then I'm asking them a lot of questions. I start with, hey, let me just time travel. I don't think we're a fit. I think we're 12 months too early. Here's my understanding of your investment thesis, your criteria. Please clarify. They love that I did the homework. I said, and I think we'll be done with this call in 15 minutes. They're like, never heard that before. So they'll talk for 10 minutes. I'll talk for 2 or 3. They'll say, wow, you were prescient. This is right on. Talk to us in 6 months. This is my last company. I raised $2 million last year in a fintech, which is a miracle. And anyway, just playing a little hard to get and knowing your stuff, but finding that guy, I found 2 of those guys. I just asked around to my pals in the industry who they knew that was well respected. I call him a C-suite door kicker. And so I've been able to find 2 for the last 2 companies. So not too hard.
I love that term. I wrote it in the chat. I love that
C-suite
term.
door kicker. Yeah,
Yeah, that's
it's great.
great.
And they love
But-
the term too. Both
Yeah,
guys are
it's
like,
great.
yeah, they kind of like, that's me.
I think we just said the same thing, different timestamps, but same ratio. A really good first call with an investor, in my opinion, it sounds like yours, is 85%, 90% them speaking, and maybe 5% you pitching. Like you are
and
there.
they're stunned. They're
Yeah.
stunned at the end. They
And
go,
that's-
oh my
it
gosh,
always
I've never,
works out.
without
Yeah.
talking fast, I've never heard anybody. And I'll say, based on what you heard today, give me some feedback. Give me some ideas on, is it clear? Is it concise? They're like, we've never heard anything like this in this concise a format. So anyway, great to be a part of this. Look
It's a
forward to
great
future
question
times.
too, where you say, let's time travel 12 months ahead of time. What do
I
I
love
need
that.
to do to get your funding? That's a great framing.
I do that with
because
clients too. I'll say 12
Yeah.
months in the future, everything went great. What happened? And boy, they love that question.
And that takes all the pressure off of the
does.
investor, because now they're not looking at it as like, oh, I got to make a decision. They're like, this person doesn't even want my money.
I've
I'll just
audibly
help
heard them sigh and
Yeah,
relax,
it's a
enjoy
great
the call.
question.
Yeah. Thanks.
I do that same technique where I say, I'm not fundraising right now. I'm just trying to figure out my plan. But that's a great tip there. Okay.
Thanks.
That was awesome. All right. So just real quick, I haven't posted into school yet. For anyone who's not a member, by the way, this is where I organize everything around everything. But next week, so we have 5 conversations scheduled for December. I'll start backwards because we all know Nanea and love her. So Nanea is coming back for part 2. All the members of the collective know that she is a total legend. At our call last week, she talked about AI agents, and she herself has raised 26 million. She's working on raising some more, and so she's really, really smart about framing for VR startups or just any sort of startup. So December 27th, we're going to do that one. It's our only one we're not doing on our usual Wednesday day, but that's Christmas week. So she was nice enough to hop on with us. So make sure to go in there and RSVP. The week prior to that, we have Luke Wilson. I don't know how much I can say about his numbers. He can probably tell us more in private, but he's killing it. And he basically is like the person who supplies all the AR, VR hardware management for large enterprises. So like if you have a meditation app and you want to work with hospitals, it's his software that interfaces between your app and the hospital to make sure everything's charged and managed and the content's up to date. Great business, really capital efficient, awesome founder. The week before that, we have Dave coming, who runs FOV Ventures. For those of you that are in Europe, make sure you mark this on your calendar. Dave is very knowledgeable in our space, very good with startups, and specifically invest in the UK. So it'll be good for UK founders to come get FaceTime, and then good for US founders because European VCs think differently. I experienced it firsthand when I was in London, and it'll be good to get his insights. And then immediately next week, we have two special guests coming. Daniel and Karam are both coming to chat about AR, VR, and EDU. They're both running AR, VR, EDU companies. Both of them are doing great on revenue. They're, Karam, for example, has 700 schools as customers, and he's taught 150,000 students in those schools using VR and just getting started. Daniel, similar numbers. So this will be a very cool conversation where we learn about the future of education through two of our members. And then also, this one's for fun. I'm just doing it if anyone wants to join. On Monday, we're going to do Monday Morning Money, the monthly Monday Morning Money. Say that 10 times fast. I'm just going to talk about global markets, investing, any sort of random thing that I can think of related to it. So make sure you go RSVP for those in the calendar. If you're not already in there, you can join the group with this link in the chat. And there's a free trial so everyone can join as well, which is something new I'm just launching. All right, so there's that house cleaning. Other thoughts or ideas from the conversation with Mark, or general questions around fundraising, since it sounds like Craig is an angel. Does anyone want to come pitch him? Not really, but in a way.
I have a question following up on that conversation.
Stupid, and you'll like it, I promise. So, friendly fire. I'm famous for friendly fire.
That's awesome. Yeah, no, what was your question?
Yeah, it's just I was surprised at the discussion about just hanging out and talking with people and not pitching, because my prejudice would be that everybody's slammed, attention spans are short, and nobody's just that you don't already have a real connection with is interested in hanging out and chatting with somebody who's not even sure if he or she is interested in them funding a deal. Can you speak a little bit about reconciling that for me?
Sure. To give a metaphor here, okay, so the question is, why is it important to network instead of pitch? And there's a lot of reasons that would say you should just be pitching and get to an answer. The answer is that networking is a multiplier effect, where pitching is a binary result. Okay, so if I go into a meeting and I meet a person, okay, they can I can pitch them, in which case the result is a yes or a no, right? It's binary. They're either investing or they're not investing. Those are my only two outcomes if I go in there and I pitch. It's a yes or no. If I go in there with the mindset of networking, okay, now I have, instead of just two outcomes of that conversation, there's 100 outcomes of that conversation. That person can introduce me to a customer. That person can introduce me to their friend who is looking for a job. That person can give me advice over email 2 months later. That person can still invest. That's still a possibility, right? And so you're still pitching, but it's smarter to network, because now you have opened up all these possibilities if the person genuinely likes you. To me, that is the key thing, is does that person genuinely like you? And if they do, they're going to be able to help you, not just this year, but in 10 years. Whereas when I've gone into pitches and I've got rejected from investors, it doesn't give enough conversation, or doesn't give enough momentum for me to build their trust over time. And so then I can't call on them in a year and a half when I might need something. And so that's the logic of networking first. And that's not to say in a month and a half after you've networked with them and sent a few emails and like you have a friendly rapport, then you can go get rejected and pitch them. In which case that's okay because they're going to reject you in a way that's helpful and you can still, you know, circle back with them. But like I've found the longer you can delay your pitch and the more good will you can build with somebody and actually become friends with them, the way better off you're going to be over time.
Okay, that's helpful. Thanks.
I'll just add, Don, that is exactly what I've been doing over the last 3 years. And the value in that is it's just it's the big thing that validates, you collect information, you grow, your understanding grows, how you fit in the overall scheme of things. The concept that I had with what I'm doing right now, I developed in the early 90s and my colleagues in the industry. You're always wanting to challenge the platform and the validity of the assumptions and what it means to changing the industry. So all that comes in one big package when you're talking to people that you either know for a long time or new people. And you just constantly grow with your understanding of how you're going to develop your own business. But thank you so much for today. It was great. All done.
Yep, absolutely. We do them every Wednesday. If you want to join the collective, the link is in the chat. But yeah, we do these every Wednesday and they're always very unique and cool. Alan, I see you have your hand up.
Yeah, I was just thinking to myself how AI is going to disrupt the venture capital industry, because if it really becomes down to relationships, which is why we see most of the investments going to, you know, people that went to Stanford and Harvard and people that went to school together. And that's maybe why the failure rate is so high, because they're not making decisions based on the most likely outcome of success for the company. They're making it based on their personal relationships, which somebody's going to come along and go, you know what, maybe this is not the best way of doing this. Maybe we should just use algorithms to decide what to bet on. Improve this odds of 1 in 10 that they currently enjoy.
Oh, I don't know. You know, I spent 6 years in the VC biz, running Osborne Capital and Trident Capital. So I've been on the other side of the fence for a while. And I wrote a Devil's Dictionary of VC terms with a buddy of mine back in those days. And one of those is a definition of due diligence, which is the process through which you go to analyze a company to come up with reasons to invest in a company that you want to invest in and not invest in a company.
Yeah. 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 And that's kind of what Mark hinted at that, where he was saying it's kind of a hell yes or hell no. And then from there, you're just validating your initial gut reaction.
There's a lot of confirmation bias in the process.
Yeah.
Which is why Don is telling you, make them want to find reasons to invest in you. It's easy to find no. I mean, at a random, there's lots of reasons not to invest in something. But if they like you, maybe in those little conversations you've had, you might have dropped something that really impressed them that made them go, oh, never thought of that. They'll be, if you impress them in some way, then they're going to generally tend to be more easily, there's a kind of a halo effect for other things that you say and represent, and you'll be more believable.
Yeah.
So the most personable people get the investment, not the most likely to be successful.
Yeah, no, people that are rough around the edges and difficult have a hard time raising money, for sure.
Yeah, it is a social game. It is a networking game.
It's sales, to be quite blunt about it.
And it's one of the fundamentally, it just, the way I think about it, because I want to just go to your point, Eric, on sales, you're selling a dream. Like, you don't have a product, you don't have anything. You are literally selling a dream. That is your product, is a dream that has not happened and might never happen.
To a customer base of 1 or 2.
Yeah, right. Versus like, if I sell you a wrench, you know what you're going to do with that wrench. You know it's a wrench. You know it works. You know, like, you know what you're getting if you give me $10. But if you give me 10 million, you have no idea what you're getting because I sold you a dream. And so it really is a sales job of selling something that does not yet exist in the world. And so it is hard to sell.
So would you recommend, Don, just abandoning, like just take off the table submitting, for example, your pitch through, you know, a VC that looks like they're right in the bullseye, and they have a website and they say, give us your deck. Should we just forget about that and not even do that?
I mean, almost.
I think.
Go ahead.
Marvin's in the audience. He's a good example of this, Noah. So like Marvin is a very, very smart 23-year-old boy genius. He's built this insane piece of hardware, a VR treadmill. He's doing it out in Germany, did it from his bedroom with like almost no money. Like he's everything an investor wants to bet on and the type of person that investors want to support. He doesn't have traction yet. And so what we decided from his ask in the pitch deck is rather than ask for money, let's ask for advice. So like the deck literally says at the end, I'm looking to meet 3 hardware founders that have sold hardware businesses before to get advisors, fundraising, $0. Like that's the pitch, right? And so you can still submit your stuff through these channels, but maybe ask for something that's like looking to grow my network, have a whole pitch deck. And then at the end, instead of asking for $1 million, you say, looking to grow my network with people of this background. Like I would think about fundraising more from a networking perspective than from a pitch perspective until you have enough of a backlog of investors that and they know you, and then you pitch and then you sell your heart out, and then it's just sell. But that's a
absolutely
very
fantastic answer. That took me to the mountain. Thank you.
Yep.
Well, also, Don,
Marvin, he's the boy genius. I just
yeah. Also, Don, can you say that you'll be raising money in about a year?
Yeah.
And then say, okay, this is what I'm building. I need advice.
Yep.
So
you don't need that. I mean, if you don't, there's nothing wrong with saying, I don't know. I don't know if I'll raise next month or in a year. Right. But right now I know what I do need, which is helpful advice from smart people.
Got it.
Don, you mentioned traction and the value. How do you see traction figuring into all of these things we're talking about? Because we can have great ideas, we can have those dreams, and we can do the networking and pitching, but I'm constant with the guys that I work with, my partners. We're always, traction's it. Traction's the attention that's where our focus is at. And I think you had like 500 people on one time, and 125 people were left, and your guest drilled home the importance of traction. You want to add anything to that?
Traction is table stakes.
Yeah.
So like if you don't have traction, you're fooling yourself to go try to raise millions of bucks in 2024. You got to get traction. It's table stakes.
How much traction is necessary? Because that's another thing I've been debating is, do I have enough traction that it's now is the time? Or is it finish the POC, get it into customers' hands, and then get those testimonials, and then is the time?
I mean, you're doing security and defense stuff. So you have such a high barrier to get that first case study that I would think as soon as you have that, you probably have enough traction to at least go raise some money around that story.
Could I share my screen and show like the traction that I do have at this point?
No, I don't think. We gotta hop off at 4. But if you want to send me a screenshot in school, send me your traction. I can look at it. But I think that specifically the industry you're in, if you have a POC with a credible defense and security prime or whatever it is, you should have enough to go get some sort of funding.
I can tell you what the traction means in my industry in XR. I don't know about anybody else, but we launched a new app in September, and now it's the number 6 top selling app on the Quest store. Not enough traction. So you want sufficient traction to really impress VCs? Profitability. You have to actually be cash flow positive. That's traction today.
Then if you're there, like
it's a rough environment out there, but that's my experience. That's it.
That's funny. Yeah, but you know what? You could turn that into a profitable business for yourself. You don't need VCs and VR.
Or just put AI in the front and you're fine.
They want to give you money if you don't need it.
Yeah, that's awesome. All right. Well, that was very funny. All right, we're gonna end on that. It's 4 o'clock. I have to hop for a call. thanks everybody for joining. If you want to come to next week, there's a free trial for the collective and you can get in there and play around with it. So I suggest you sign up in the chat, and thanks everybody for coming. If you're not there, for all the members, let me know if you need any help in the group. And if not, I'll see you on Monday for monthly morning Monday money. Bye-bye.
Nice meeting everyone.
Bye, thank you.